Hey, what's up, guys? Sam here. Kicking off the 9:30 for the first Fed day of 2026. How excited are you for Fed Day? Jerome Powell knows you've missed him. Him and his purple tie. But good to see you. Last Wednesday of January. Somehow we're already a stone's throw away from February. I don't know how that happened. But here we are. Good to see you, fine folks. Thank you, Brian. Thank you, Lorna. Thank you, Mirza. Good to see you, Tim, Eshu, Marieth, and Esther. Good to see you guys. All right. So everyone's waiting on the breakout, right? I think Henry started his session by mentioning the SG note, the spot gamma note, pointing that fact out that the market is clearly aligning itself for a massive multi-week breakout that would likely catalyze this week. And surely nothing could prevent that from happening, right? I would say the probability is pretty high. I mean, I wrote down 99% probability, mostly a little bit tongue-in-cheek, but I actually don't necessarily disagree with it just because the pattern is there, the coil is there, and more importantly, the vibe is there, the attitude is there, right? And this has been in place now since the Sunday open, right? It gapped down 70, and we're trading 136 off of that level from just a Sunday. So there's a definite attitude in the market. It's something we've talked about whenever the bulls find themselves in a spot where it looks a little bit shaky. Their main move, and it is a superpower, is to absolutely tee off. So let's take a look at the QQQ daily. I'd be pretty surprised. I mean, the only thing I'm seeing is that today they're expecting nothing, like Henry was mentioning, and again from the spot gamma note. I think that's mispriced, but again the vibe is extraordinarily strong, and I'm not entirely sure what he could say that would mess things up. Of course, it doesn't really matter, but meaning that the market will interpret it however it wants. But he's on his way out. The new guy's going to be extraordinarily, whoever the new guy is going to be extraordinarily friendly towards basically going back to zero on on rates. So market's always looking ahead. From an entry perspective, though, I mean, this is a very unattractive entry spot, right? Like gap, gap, gap. It's just not it's just not an attractive entry spot. But the one thing that was a little funky here, and of course, you know, if you run the market that hard, I mean, what does a parabola look like? Would that count as a parabola? I don't know. I mean, I'm gonna slap some X2 on here. That's pretty parabolic. But this has been out of phase, right? That's been out of phase. The thing is, again, from the inside out, this is a momentum indicator. All it is it just says it's neutral. So if they're able to tee off, and I would certainly say that this angle of attack is, you almost literally could not get a stronger angle of attack. I mean, look at that angle there. You know, like this is like 45 degrees. That's almost, what is that, like an 80-degree angle? It's pretty impressive. So this has been out of phase, but once that gets fixed, then you got the weekly squeeze. You got your thrust arrow now coming in on the Qs. You never lost it on SPY. So SPY's been good since the tariff lows off that one arrow. And so, yeah, I mean, it's an interesting spot where I think literally everyone sees it the same way now. And it's kind of a big jump from where we were on Friday to today. But that's really the only nominal concern I would have, is that literally nobody sees it any other way other than a breakout to the upside. But the attitude of the market is one that justifies that. And there's been this pattern in play, and it happens on the 5 minute chart. It happens, I would say that over the last 3 days, it has had 100% winning probability. Today's been the sloppiest expression of it, but the pattern has been to undercut a low, rally, undercut a low, rally, undercut a low, rally, right? And so even here in this exact moment in time, they're trying to do that again. It's not really playing out the way that it has before, but it's not really creating any downward pressure either, right? Like you had this level here, right? This little kind of cluster of a zone, right? Very obvious place that folks are going to have stops. They come down here, they poke it. 1 bar later, it's right back into the range. What typically had been happening here is this exact pattern that I just drew in, but then they would immediately come up here and stop out anyone who would have shorted that wick high. So basically, let's say you got the perfect short on that wick, and then they take out this low, you're fist pumping, you're saying, let's go. Maybe your stop, if you're really stubborn, you'd leave your stop at your entry. Well, what we have seen is that they would wick it below and then immediately come up and grab the liquidity and then grind it until the next time that they ran the same pattern. This time it's a little bit weaker, but at the same time, it's not really going anywhere, right? It looks to have a downward structure to it, but in reality, it's kind of just sideways. So as long as this pattern is in play, right, and I kind of wrote about it over here, and again, this isn't something that I can really articulate all that well. Usually I think I'm okay at articulating complex ideas, but this isn't when I can super articulate. But this is a little something that I think is kind of running in the background, and it's not one that I think you want to be looking to fight. You do not fight this, right? So ignore almost every signal, in my opinion. Although today's a little sloppier. Today might be the day that it actually tuckers out. But at least until proven otherwise, as long as that's running in the background, don't do not do not fight that, right? You can either fight it and have a bad time, or you can go with it and have a very, very, very easy time. So do not fight that. So aside from that, that's kind of it. Really, my plan for today is actually I'm going to step out after my session and I'll be back for Powell. I really don't see much here that I want to kind of scrap with. Some of these signals aren't particularly great, but the aggression of that seek and destroy pattern prevents me from acting on anything that I would normally act on to the downside. So then I'm just kind of left waiting for the event, which is okay. I can either sit here and fight with algorithms over ticks and be exhausted by the time that the event happens, or I can take my mom to buy groceries in the meantime and have a fresh batch of energy for the event. What's the plan on the SPX put flag? There is none. There is none. We hold it. We hold it to the event and we see what happens. We hold it to the event and we see what happens. There's nothing to do between now and then. Going forward, though, there was a little bit of a hesitation there on my part and mind you, I had about 5 minutes, maybe at most 15, Sunday night at 5 p.m. And I was watching, so I don't have any excuses. But I was watching. It wasn't like I was, you know, doing other things. I was watching, and I had about 15 minutes to delta hedge the position with futures, and I kind of overthought it a little bit because I was like, okay, I want to delta hedge this position. If it wasn't a public trade, I would have absolutely delta hedge. But the fact that it was a public position made me kind of pump the brakes a little bit. I was like, okay, if I delta hedge on the futures, maybe not everybody can do that. It's Sunday night. I don't want to delta hedge and then not tell them and then come in tomorrow and like, oh yeah, I delta hedge but I didn't tell you or didn't alert it out. So going forward, if I ever find myself in that spot and I need to delta hedge, I'm just going to delta hedge and let the chips fall where they may. I'll alert it out as a futures order at whatever time it is, even if it is at Sunday night. And then that way I can just treat it as if it were my own trade. It was actually twofold. Now I'll just open the kimono here as there's really not much I want to do here. I would, I don't want to fade you guys, but you know how I'm positioned. So a little red would do a lot of good for me. But it was twofold. One, it was a hesitation. And when I tell you the story, don't listen to it from my perspective because it's not going to be interesting from that perspective. I want you to apply it to your own perspective and to your own trading and make it your own. But there was two-part hesitation. One, it was, how do I handle delta hedging on a Sunday night on a public trade where not everybody will be able to delta hedge, right? Because not everybody's going to be trading futures, all that stuff. So a bit of hesitation there. Probably a unique problem because you're probably not sharing your trades publicly. So that's probably a unique problem to me. And the solution's pretty simple. Delta, I'm going to do whatever I would do. I'll send out the alert, and that's all I can do for that aspect of it. The second part was a little bit of greed and frankly, maybe a little bit of entitlement because when the futures opened and it put in that giant reversal hammer down 70 on Sunday at 5 p.m., I was like, well, I could I had a chance to delta hedge down 70. I was like, well, I missed that. I could delta hedge down 50 and still lock in a profit. But I was like, no, this trade's going to start working. I just, you don't think these thoughts out loud. You don't ever think I deserve more, but your actions are reflective of that thought. So I didn't actually sit there Sunday night thinking I deserve more, but I was thinking, you know what? Let's let it trade through, right? Let's let it trade through. I already missed the first 20 points, right? It was down 70. Now it's only down 50. This is a good trade. Let's take it down to another 70 and I'll delta hedge at the lows. And that was about 131 points ago. So again, I tell you this stuff because I think this is the more interesting part on a day, right? I could sit here and kind of go through charts with you and say, oh yeah, I like that chart. I don't like that chart. Oh, that chart's neutral. But that's boring, in my opinion. So instead, let's, I actually have a list here of a couple of kind of psychological things that I wanted to talk about. So maybe I'll kind of get to it, but that was one of them. So to put a point on that, to make it universal, when you're trading, don't underestimate the necessity for decisiveness, right? I think if you're indecisive, like I was Sunday night for the number of reasons that I mentioned, if you're indecisive, it's going to cost you, right? You want to come into a trading day and know what you're going to do when it happens, right? You don't want to be asking yourself, what am I going to do during the trading day, right? If it does this, I will do this. If it does that, I will do that. And if it doesn't do either of those things, I will do nothing, right? And your plan should be specifically tailored to a set of conditions that you can take action on. So there's that little piece of it. It's actually not playing out as it has before. This is the first time all week that I've seen the seek and destroy algo not follow through. And it has had 100% win rate So this is the first time I've seen it that it has not actually done the thing. So keeps it a little bit spicier than normal, but at the same time, I would the the easier trade will be to just wait for the turn signal and buy it. So I think regardless of what side of the market you're on here, obviously if you're bearish, you want it to go lower. I think if you're bullish, I think you actually want it to go lower. That would kind of cool off the momentum a bit, give you a little bit more proximity to an actual entry level that is proximal to support, and then you can buy it on a turn. So I think regardless of what team you're on right here, I think even bulls should probably be rooting for a little bit lower so they can get the turn signal at a better price and buy the thing. Yeah, I'd say go ahead and lure it out Sunday night. Yeah, no, for sure. And if somebody doesn't have access to futures trading, well, maybe that would encourage them to do that. So yeah, we all have some time here together again. Kind of shared with my thoughts here with you. The SPX did hit 7,000, at least for now. It has been nominally rejected. It's down a good 20 points off that level. We'll see if any of this turns into something. I have a couple of new toys here that I'm playing with, and this is a big one. So there's an active bull trap there at the moment that was created today. We'll see if it has any juice whatsoever. And so let's do a couple questions if you guys have any. Again, don't wait until the end. It seems like it always works out that way. Nobody ever asks any questions, and then the speed of the questions happens all in the last 10 minutes. So if you're sitting in the back of the auditorium, even if it's a question about the squirrels, let's do that now, and then I'll see if I can kind of weave in the rest of the. I have two other psychology points that I wanted to weave in, so we'll see if we're able to do that. Where do you find? Oh, like yeah. The notes are in the drive, in the room drive, or in the files. I'm always going to call it the room drive. It's in the files section. So I don't love the idea, and I haven't acted on it yet. But one of the major signal, and oil is like the worst expression of it. In reality, the idea comes from this, which is DJCI, which is the commodities index. And there's a very large and very attractive looking breakout pattern on this. Now, granted, it looks ridiculous right now because of metals. So it's it's a little hard to come in here and buy this one. Although, frankly, the angle of attack here, as ridiculous as this chart looks, this is actually more of a X2 kind of parabola shape. Like if I look at the Qs, when I drew that in, it didn't even have this subtlety to it. The Qs were this. It was like literally 80 degrees. At least this one kind of has a kind of a soft curve to it. But there was a monthly squeeze on this thing, and you kind of have like this kind of large potential breakout pattern there. So it really does look like commodities in general. And, at this point, really the only one that has lagged is energy. It really looks like this thing wants to perk up here. So I haven't acted on this yet, but I was thinking about maybe starting a position in something like USO Leaps. Kind of put it into account I don't look at, so I don't have to look at it every day. But I have not yet acted on such things. Someone pointed out the other day that Pal still has 2 years to go as a member of the committee, not as the chair. So if he decides not to relinquish the member seat, then all Trump can do is appoint a new chair from the current committee members, and Pal might just do it. So yeah, he's definitely gone from the chair. And I think it depends on whether he's a good boy or not as to whether he gets perp walked. Gold and silver have also moved up parabolically. Would you do any trades on gold and silver? Well, remember that I sold my last silver bars at 44. And I told the lady that everything I sell triples. So 44 times 3 is, what is it, 132? So 132 should be about the right price there on silver. No, I mean, I don't really have a trade here. Yeah, 2 days ago, it kind of looked like a blow off top. You kind of had like this kind of because what you would look for is giant volume in a reversal candle, and most of the time this kind of is a ubiquitous kind of situation like that. But then again, this one also kind of looked like it could have been a topping candle. So I think with this one, either you're just buying every hourly squeeze in the silver, when it has a silver, when the silver futures has an intraday squeeze, then you just buy SLV calls, like an hourly especially a 4 hour, but an hourly squeeze on the SI by SLV calls, weeklies. Without that, I don't really have something I can do with it. Because, as much as this candle here would typically be a giant blow off top reversal candle, it doesn't actually trigger until you close below it. And then, I could frankly make the same argument about that candle, which actually did close below it. And at the time, its volume did look quite large. It's dwarfed by this current one. But these two bars here, that big up bar and then the big engulfing bar with huge volume, would have also typically been a more of a topping candle. But that was literally 30 points ago. So I don't see this and say I can short it. Nor most of the time it's actually somewhat of a waste of time to even think that way. So I don't want to short it because there's clearly, a lot of residual energy in it. But I don't have any. I have a 2-hour squeeze, I suppose. So really, that's just the way I play these. Is if you ever have a situation like this, I don't have a way to control risk on the larger time frame, and therefore I would just look for hourly squeezes to play the long side. The bull trap just basically means that it went above a previous high and then went below it. So you had this high here. You went above it, and now you're trading below it. I could show you a larger example. So, and I should have some Palantir short here. I really should. I might just have to play this one for earnings. I don't think I'll alert it out because, well, you have the world's strongest market of all time, but this is kind of a classic one, and it has literally every bell and whistle this indicator is capable of. It has all of it all at once, and not in a good way. It's caution, negative momentum, negative divergence, and a bull trap. So the reason it says bull trap is because it has this little thing going on here. So you see how this was an important high, 190, right? Hit it and crashed down to 150. So the reason it says bull trap is because it went above that level and is now trading below it. So that triggers a bull trap warning signal. The real devastating signal though here on Palantir is caution signal. Because you can see how clean the indicator's been, right? Like, look at that. I mean, that's pretty nice, folks. You had this giant drop, you have that giant drop, you have that giant drop, and only as of now would you be getting dumped out. But the reason it says caution is because you see how the red, the slow line is now on top of the red line. Now they're both red, but the slow line is still above the upper limit. Why does that matter? It creates a situation identical to Netflix. So I almost certainly have to play Palantir short for the report. I'm not saying it's going to work, but I just, from a principle perspective, I have to do it. So here's one that already played out. So Palantir is basically like right about here. And you can see what happened with Netflix. So, and it's almost identical. Look at Netflix here. We gave you an entry there, basically at $25. Dumps you out here at $120. Right? So how sick is that? But more importantly, to the point, Palantir has this pattern in play, right? Same exact pattern, except price is already played out to the downside on Netflix. So this is one that's already done the thing. Whereas Palantir is in the process of it. So my bias actually is that Palantir is going to get absolutely destroyed. Now, it's hard to express that publicly or even to talk about it because you're in a cartoonishly strong market. But this is that you can see it. I mean, the pattern is really, really clear, and there's no false signal either, right? It's not like I'm picking and choosing the signal. There's literally two arrows. There's one arrow that triggered June of 2023. There's another arrow that triggered short December 15th, 2025. So that's a little bit of a description there as to why that is. MSOS at this point is officially the most embarrassing trade that I have ever done. I've been here 9 years. In June, it will be 9 years that I've been at Simpler Trading, which doesn't feel like it, but in June, it'll be 9 years. In 9 years of being at Simpler Trading, I have never done a more embarrassing trade than MSOS. And it's not even, it was a lotto ticket. It's a 26-cent debit, right? Now, here's the problem. You say 26-cent debit, it sounds cheap. The problem is, and I'll show you my P&L on this. The problem is if it's 26 cents, you got to do a lot of them. So this is my P&L on it right now. And I actually have another 50 in another account. So not proud of this. Not proud of it. So let's talk about this for a second. Right, this is my second part in the psychology series here, the unintentional psychology series. Why is this trade the most embarrassing trade that I've ever taken at Simpler Trading? And if I sounded tilted on Monday, it's because I was super tilted. And I was tilted not because, of taking a loss on the SPX when it gapped down 70 only for it to open green. That doesn't help certainly, but that's just another day in the office. When I kind of went back and I defragmented my thoughts, I was like, why was I really that tilted? Because despite my tone, sometimes I'm actually not usually tilted. I've been doing it too long. My nervous system is fried to be tilted. So why was I tilted? I'm tilted because I'm tired of looking at this fucking thing, right? You guys remember the RCAT situation? Now, let's introduce a little bit of levity here. And TG, if you're watching, I apologize, but I got to do this to you. This is too funny not to show. So I had to respond to my embarrassment with the only weapon I have, which is humor. So I was like, how did I get involved into this stuff? And I was like, that rascally raccoon, he got me again. First off, can we say how good AI has gotten? I mean, look, that is perfect. I laughed so hard at this yesterday when I made it. I was like, and I sent it to TG obviously, and I was like, you know what? This picture, the laugh that I got, my stomach hurt. I laughed so hard. I was like, the laugh that I got from this picture is worth the loss in MSOS. But let me make it relevant. So why is my loss in MSOS the most embarrassing loss that I've had here at 9 years? It's the most embarrassing loss because I'm so far off the reservation with what I should be trading with this idea that it is there's no other word that I have for it other than embarrassing. So tie it back to you. Why does this matter to you? It matters to you because I think that well, I know this actually, at least from what I've seen. My lived experience says that the best traders that I've ever met are hyper specialists. I've personally never met a trader that dabbles a little bit here, a little bit there, and is great. Personally, I've just never seen that. You know, oh yeah, I'll trade a couple penny stocks, but then I'm going to trade some Nvidia calls, and I'm going to trade some SPX, but then I'll also trade some commodities. I've never personally met that person who's like a jack of all trades and is that I would consider upper tier. So it's a reminder, and some of you learn through pain. Like if you take a big loss, you know that you probably can learn. The 2K loss there I just showed you on MSOS, it's not big enough to hurt me. Like I don't feel it. I also have a very high pain tolerance, so I don't learn that way. But I'm going to offer you a different way to learn, and take it or leave it. And that is massive embarrassment. Because while I can handle pain, I really don't. And this is personal embarrassment, right? Like I don't have to talk about this stuff with you guys. I could just send out the exit to close the freaking MSOS trade at a penny, whatever it's trading at, you know, and move on with my life. But it's embarrassing personally, quietly, as I sit here in my own quiet home. It's embarrassing. So here's my point to avoid rambling much further. Find whatever works for you that actually rewires your nervous system to learn. Because if you find that you keep making the same mistake, that means that the consequence or the painful input to your nervous system is not the right one. It's like a key for the you have the wrong key for the wrong lock, right? So putting that out there for you. Sometimes, you know, at least one of you will learn through embarrassment like I do. So next time that you have a bad trade, and I will offer you my service completely for free. Send me a picture of it. Send me a picture of the chart. Send me a picture of your P&L, and I will return to you a scathing, highly embarrassing return to your email so that you can write it into your nervous system so that your great grandchildren will remember it. It will be generationally written into your nervous system to not do that. And that is a service that I'm willing to offer you for free. I will beat you up completely for free. Normally I charge for that. So that's MSOS. One last time, never to be seen again. Because it's just that good. Can we get some love? So after seeing this picture, I think AI is going to 1 billion. Whatever AI stock you're in, it's going to 1 billion. Look what it can do. AI is amazing. It's perfect. When I thought of this, I was like, I need TG going through the dumpster as a raccoon and then I envisioned it in my mind, and then when it actually made it, it was even better than I imagined. How often can you say that? All right, so that one is that. And I had one more psychology point, but I'm going to save it. I'll save it for a rainy day. The only other thing I'll say here is watch out for undercuts, right? For now, the seek and destroy algo is not quite. It's a little tuckered out, it seems, but watch out for undercuts. They seem to be ubiquitous. There was one there, they lost, so there's a new low here. They undercut it and they go right to it again. See, it even tells you. I can tell you this because my little bear trap indicator has been lighting up literally for 3 days in a row now, nonstop. So, little bear trap there. Bear trap's the opposite. So this is your local low. Everyone has stops there. It's 12. You stop them out. You then push it higher. Typically, what you would expect here is for a rolling stop out. So anyone who got short that wicks should be stopped out. And frankly, if it was any other day, last 2 days, they would probably go up there and grab those liquidity too. If this does not work, and by work I mean go up here and actually at least stop out this wick. If this doesn't work, then that actually gives you some information. But for now, just be very judicious with the idea that, oh, it's going to break down, because every single local low has had a undercut and a fight. And what that ends up doing is it looks like it's going lower, but in reality, it's actually just kind of in a box. So it won't be until you actually get continuation from breaks that the dynamic has shifted. So it's a very easy pattern to spot. Just draw a line across the local low. Draw a line across the local low. This looks pretty solid. Looks like a nice consolidation breakout. I don't really have an entry unless you just want to cowboy up and chase it. I wish you had a squeeze or something. You don't really have any of that. Typically, you want to buy the breakout level, which is 58.5, 59. If it's any good, it should just going by the book, right? Like, not to be too obvious, but there's no other move I have here. You buy the breakout, and so you break out the 59 strike. Ideally, you retest it on low volume, and then that sets up the move. If you just had to have it, and this breakout is real, and you're getting your first little green bar here, I wouldn't blame you, but typically you want to get a better entry on this. The reason being is just because it does look good, but if you have to have it at 61.8, and then all of a sudden it comes back in to 58 and retest the breakout level, what are you going to do? Are you going to buy more, which should be the right answer, or are you going to panic? And only you know. So that kind of shapes the pattern. For me, I would personally, if it were me, I just personally wait till 58. But of course, they're in the risk in having a better entry is that it just goes forever. So I would look to buy it at 58, 58.5. Ideally. The Hilo Pro, what is it based on? It's a really it's a double slow stochastic. So the way it works is it's a custom slow stochastic run twice. So I run it twice. There's 2 iterations of it running at once. You see one, the other one is hidden. the hidden one confirms the first one. So the only one I really care about is what you're seeing. But to make it better, because why not? There's actually a hidden one running behind the scenes. I could show it to you if you want. And that gives you the confirm label. The confirmed is actually really important because that means that the both iterations of the indicator are actually in sync. The thrust signal just tells you what the last arrow is, and then sometimes you'll have like strong thrust, which means it's a stronger signal, and then sometimes you'll have slingshot thrust, which means that it gave a sell signal canceled out immediately by a buy signal. So well, lots of information there, but no, it's not based on RSI. It's based on slow stochastic. You're very indecisive in general. Thanks for opening up. I appreciate that. It's not super easy to sit in the back of the class there and actually open up. So I appreciate the participation. Very indecisive in general. Trying to live the patent quote: "A good plan violently executed now is better than a perfect plan next week." Ain't that the freaking truth? So much of life can be just solved by taking action, and especially in a room like this, right? Because I would imagine you guys are all like type A. You're all like, you're going to skew higher on the IQ curve. You're going to skew higher on the income curve, just by the very nature of being here, right? Like the room acts as a filter. So by the very nature, you're kind of self-filtering yourselves to be this particular archetype of person. And I think that because of having that archetype, at least most of us, I would imagine, type A skews more intellectual, or at least maybe that's not the right way to say it, skews higher on the IQ curve, however you want to define that, I think is appropriate. That comes with a cost, right? That comes with a cost. The cost can sometimes be over analysis, especially if you're like more of like an engineer type, because then you want tolerances down to like 4 decimals. And life and trading doesn't offer you that often, very, very rarely. So that's actually a really good point. If you're ever struggling with something, whatever it is, the best thing you can do is not to sit down and plan it out and write about it and figure it out and watch 100 different videos and think about it. Just start, fail, and start again. And that's really a good point there. What am I selling next week? Yeah. I always tell you guys what I'm selling. I told you when I sold my Bitcoin at 40K, only to watch it go to 120. I had about 9 of those, so you do the math on that. Sold my silver at 44. Should see it go to about 132. Imagine if I still had my 5,000 ounces of silver at this price. Oh, man. I'd go buy me a Berkshire A share. Get an extra cheese on the Whopper tonight, honey. You were wondering why I would trade MSOS. To be fair, I like the setup. The problem is, and this goes to the point that I always talk to you guys about, and I really try to talk to TG about this too, because like I'm a big fan of his work actually. Like I think a lot of his stuff is actually very similar to the way I learned as well, and it's kind of interesting because he learned completely on his own. I learned completely on my own. I didn't learn from anybody. Like I didn't have the benefit of having a mentor. I didn't even know who John Carter was when I started Simpler Trading. I hadn't read his book. I had no idea who he was. When I walked in the office, I met him. I just talked to him like a normal guy because I don't, he doesn't have any celebrity to me because I don't know who he was. So I learned everything myself. He learned everything himself. And yet, like when we met and talked, it was like, damn, dude, we kind of learned the same things the same way. And so I always kind of push him to like, if I can get him to trade the big stuff, And I say this with great respect, like, because I think he would be an absolute demon if and here's why. It's a very simple reason as to why. Let me show you this. So MSOS, why is this dog shit so difficult to trade? And it's not just MSOS, it's all this stuff, right? Why is all this nicky nacky stuff kind of difficult to trade? Look at the breakout candle that happened on Friday, right? Well, was it a proper breakout? Not really. I mean, it doesn't take out the high or anything, but it does take out the high of the low bar, right? So it probably would trigger that indicator that Henry has, that I think is a pretty good indicator. Triggers the high of the low bar. It did it on volume, opens low, closes at the absolute high, and then look what happens afterwards, right? Just death. Why is that? Why does this dog shit act like this? It acts like this because there's not enough eyes on it, right? And so when you have a larger pool of activity, investors, volume, participation, the Nvidias of the world, the all these things that connect into this stuff, um, it creates a larger liquidity pool. The larger the liquidity pool, the more standardized the moves and more predictable the moves will be. So just to give you a very simple example, I reach down to earth and I grab a person. How tall is this person? Well, who knows? I grabbed one person out of 7 billion, 8 billion people. I could have picked up Yao Ming, and now I think everybody on earth's 7 feet tall. Or I could have picked up a little, mini me from the Austin Power movies, and now I think everybody's 3 feet tall, right? However, let's say I reach down to earth and I grab a million people. How tall are those million people collectively going to be? Probably about the earth average, whatever that is. I don't know what the earth average is. I know American average is like 5'9". So maybe the world skews shorter. Let's say it's 5'7", right? And that'll actually give me a better representation of the actual average or the actual mean. So whenever you trade low volume stuff like that, it's going to create more erratic behavior in the patterns relative to due to lower participation relative to the stuff that we normally trade. So and I do believe that if you are somebody out there that can trade that stuff, I'm not one of them. Not only can I not trade that stuff, and that my numbers would absolutely. I think I might actually be the worst person on the roster to trade that stuff. I think literally everybody else trades it better than I do whenever they do trade it. And my numbers certainly confirm that when I trade that stuff. It's always, I would say it's like 80% L's whenever I go down that road. And it's a waste of time, frankly, for me. But if you are someone that's skilled in trading the penny stocks of the world, then I think if you were to transition that to the larger stocks, you would have you'd be a demon, because if you can trade the erratic stuff, imagine how you would trade the non-erratic stuff. So just a kind of a thought that I'm putting out there into the world for consumption. Take it or leave it. Nature rewards specialist. Ain't that the truth? Shepard, you've traded everything, but when that stuff hits, it's fun and great. But for everyone gets you get stuck in 3 to 5. Not only do you get stuck in 3 to 5, then you're wasting time, right? Because any microsecond that I've spent watching MSOS is a waste of my life, complete waste of my life. I've missed. What's an obvious one that I missed? Well, frankly, almost anything at this point in tech. You could have thrown a dart lately in tech. So it's important not only to look at it from a wins to reward, profit loss perspective. I think that's the easy way to look at it. The more difficult way to quantify it is also through lost opportunity. So that's also a big one. Because if you're watching dog shit like MSOS, you're not watching something else. MSOS is the new Taylor's Kroger. Yeah, it's actually worse. Am I a UT guy? I did go to UT. Oh, is TG up next? Oh, that's good. That's good. All right. Well, like I told you folks, I'm going to hold the positions that I have with you. I think it could get interesting. The bias, however, still has to be higher. The only thing that kind of gives me just a bit of pause is just the absolutely wild angle of attack on the QQQ. When I sketched that in, it was at earlier. I hadn't done that yet, but like that was beyond a parabola. Um, even a parabola has a slight curve. The QQQ lately has been literally a 80-degree, almost line up. So that gives me a bit of pause, at least for current prices. So to go back to the point that I made initially to start the session is I think regardless of what side of the market that you're on, I think getting a slight pullback here, either into Powell or after Powell, is the best thing for you. One, if you're bearish, it'll give you an exit to exit with slightly less egg on your face. Two, if you're bullish, it'll give you a much better entry proximal to support with a momentum reset. The problem on the daily chart still persists, but I think that will be resolved basically this week. So we'll get a chance to find out if it was a fake out or not. Um, the probabilities would skew that it's not. The attitude of the last couple of days would imply that it's not. The only thing I would just caveat that with is oftentimes when the attitude is so hyper aggressive as it's been basically since Sunday after Sunday night, oftentimes that actually is kind of a crescendo. So that's part of the reason why I chose to hold the SPX trade. I was going to exit it yesterday, but then I sat here and I thought, and I was like, I actually would buy this trade today at the current price. Yesterday, I think it was trading for like 80 cents or something when I looked at it. And I was like, I would actually buy that today at that price. So that's the reason I didn't exit it, was because I actually would have bought it yesterday at the current price. If you ever look at a trade, you're like, yeah, I wouldn't buy it today, then that's probably a good sign to exit. And frankly, the expectation for the trade should be that it's going to be a loss, but just kind of going through the thought process there. That's why I chose to hold it. Did I update the indicators? I have added quite a lot of things to the indicators. Yeah, I did quite a big set of updates for them. Going back to the MSOS chart, do we have to? What would have been the trigger point to get out that stopped you from doing it? Well, frankly, that shouldn't even be a question that should be asked. And the reason being is because it's a position I shouldn't be in. So because I put myself in an awkward position by breaking my trading plan, then it puts me in a position to think in those terms. It's a very difficult situation here because like Friday starts to look like the takeoff bar, right? Like you have a very prolonged basing pattern here. Friday looks like the takeoff bar. I suppose Monday, looking at it here, when you close below the low of the Friday takeout bar, that's the exit. That's the exit. But the real answer here, and I would kind of put it back to you because only you know. One, is this stuff in your trading plan? If it is, then Monday breaking the low of the what should have been a breakout bar, when you close below that low, that's the exit. That's a wrap. It's over. So that's the answer that you probably are asking for. But the higher level question or thing that I would say is was this in your trading plan to begin with, or did you join me because we're both going to have fun breaking our plan together? When you close below the breakout bar low, that's the exit. For me, it shouldn't even be a question because I shouldn't be in this. But we trade, we laugh, and we move on. You flatter us. Well, statistically, I'm not wrong. And I beat you up enough to be nice sometimes. And I look for day trading short based on the 15 and the 5. I'm already short. So that's why I'm not adding anything here. I'm short futures. I'm short through the SPX trade. The SPX trade is obviously, it needs a lot more than this. So I didn't see anything here to do. Plus, I don't find these signals until I break they break the pattern. I'm being very judicious with adding more. So, am I participating in a way? But I obviously my SPX trade needs a lot more than this. Yeah, Don, I covered that one. Oh, Max wants some. Max wants to be beat up here for his TTD trade. Yeah, that might come out. That might come around sometime next year. It sounds like a meme, but I even have a name for it. It'd be called Trader Rehab. Maybe I can. Maybe I'll be my own first guest on this hypothetical show, and my perfect trade for Trader Rehab will be MSOS. So, if nothing else, I paid $2,000, or I lost $2,000 to buy some content. And on the first episode of Trader Rehab, we have Sam Shames. Tell us, Sam, why are you the retard that bought MSOS? Well, Sam, I decided to go dumpster diving, and I ended up covered in trash juice. Matt G, thanks for the confirmation there. It says you're speaking to me and telling me the stuff you need to hear. All stuff has been destroying me. Yeah, so yeah, I just wanted to touch on a couple of things around the psychology stuff. Just because I sometimes ask myself, I'm one of you guys, right? Like I spend more time watching the content than making the content. Like, yeah, I have a very privileged position to be with you guys, once a day for an hour, and it's super. I'm super grateful for it. And it's a real privilege, but most of the time I'm one of you. For the other 5.5 hours of the day, I'm sitting in the seats watching the show with you guys, and so I'm always thinking like, what do I want to see, right? What am I missing? What do I want to see? And frankly, the let's cover this chart, let's cover that chart stuff. It's great, but you have really, really amazing traders here, and I would love to see them all. And if you're listening, I'm talking to you specifically, whoever you are. I would love to see them all talk more about psychology, right? Like just all the things, right? Because that's really the thing that's going to take a long time to. It'll take your whole lifetime. I mean, you'll never be perfect at it. John's still working at it. Everybody works at it. So that's the stuff that I really resonate with sometimes. All right, folks. Well, that was my time. So I will bid you adieu, and we'll see what Kyle has to say. All right, guys. Catch you tomorrow. Cheers.